On April 15th, the US government imposed steep tariffs, reaching up to 245% on Chinese imports, triggering significant concerns for China's insurance industry. The affected product categories include syringes and needles, that is with 245%, lithium-ion batteries with 173%, electric vehicles with 148%, car wheels with 73%, and semiconductors with 70%. Welcome to VAR India News Hour. The US government's newly imposed tariffs are expected to ripple across multiple sectors, driving up claim costs and threatening the profitability of Chinese insurers in 2025. The key industries, that is semiconductors, medical equipment, manufacturing, aviation, and automobiles, are set to face disruptions, leading to inflated costs, slower economic growth, and higher unemployment. These economic shifts will likely dampen life insurance demand, increase premium rates, and squeeze insurer margins. Experts warn of a decline in insurers' investment income, citing growing financial market volatility and economic uncertainty due to the intensifying trade disputes. In response, China's National Financial Regulatory Administration has raised the allocation of insurance funds towards equity markets, a strategic move to inject institutional capital and stabilize financial performance. The general insurance loss ratio, which stood at 68.4% in 2024, is projected to rise in 2025 and 26. Incurred losses are expected to grow at a CAGR of 4.8% from 2025 to 2029, though escalating tariffs could push actual losses even higher. China's general insurance sector, valued at Chinese yuan renminbi 1.7 trillion, that is $245.8 billion in 2025, is forecast to grow at a slower pace, that is with 4.6% in 2025 and 4.4% in 2026 compared to 5.4% in 2024. Over the 2025 to 2029 period, the industry is expected to reach Chinese yuan renminbi 2.2 trillion, that is $306.9 billion. In direct written premiums registered a CAGR of 5.4%. Let's look into today's headlines. India blocks Pakistan government's X account and downgrades diplomatic ties. In a strong response to the Pahalgam terror attack, India has taken tough diplomatic and digital actions. These include blocking Pakistan's official account on X and suspending a key water-sharing treaty. The decisions came shortly after Prime Minister Narendra Modi led a high-level security meeting with key ministers and officials. The team decided to take strict action against what India sees as Pakistan's ongoing support for cross-border terrorism. As part of the response, both countries will also cut their High Commission staff from 55 to 30 by May. TCS launches Made in India and Made for India Sovereign Secure Sustainable Cloud. Tata Consultancy Services, that is TCS, has launched 3 India-centric digital solutions, that is TCS Sovereign Secure Cloud, TCS DigiBolt, and TCS Cyber Defense Suite, designed to be sovereign by design, secure by default, and sustainable for the future. These offerings aim to accelerate India's AI-driven transformation and comply with the Digital Personal Data Protection Act of 2023. Built on the pillars of sovereignty, security, and sustainability, they feature AI integration and dedicated infrastructure. TCS affirms its commitment to creating robust digital solutions made in India, for India, and ready for global deployment. Karnataka announces digital ad guidelines and invites applicants. Karnataka has launched the Digital Advertising Guidelines 2024, becoming the first Indian state to set clear rules for using digital media in public communication. Chief Minister Siddaramaiah said the new policy will help the government better promote its schemes through platforms like Meta and YouTube. The Department of Information and Public Relations has started registering digital media outlets and ad agencies to run official campaigns. The Chief Minister called it a landmark move, noting that digital ads now have greater reach than the traditional media. Databricks to invest $250 million in India over the period of next 3 years. Databricks, a leading data and AI company valued at $62 billion, will invest over $250 million in India over the next 3 years. The funds will support training, development, and research efforts. As part of its growth strategy, the company also plans to expand its India team by over 50%, reaching 750 employees by the end of this financial year. This move follows the opening of its new R&D office in Bengaluru, which will play a key role in the company's global innovation network alongside other international locations. The new Intel CEO plans homegrown AI strategy to compete with Nvidia. Intel's new CEO, Lip-Bu Tan, plans to develop a strong in-house AI strategy to challenge Nvidia's dominance. He admitted this will take time and is not a quick solution. Tan aims to improve Intel's existing products to support new AI trends like robotics and task-based agents. Instead of making big acquisitions, Intel will focus on building its own full-stack AI solutions similar to Nvidia's approach of selling complete data center systems. CFO David Zinsner added that improving Intel's financial health is also a top priority. That's all for now. Please like, share, comment and subscribe to VARINDIA magazine. You can download the VARINDIA app from Google Play Store and Apple App Store for more news and updates. Stay tuned. Thank you.